Hi everybody, Thomas here at Rebel Income. For value-oriented, income-focused investors like me, stocks that pay consistent dividends stand out from the tens of thousands of other publicly traded stocks in the market. Consistent dividends are a great way to filter the market for fundamentally strong stocks. By the same logic, companies that have the ability to raise their dividends on a consistent basis over time are even more impressive and maybe even more attractive for long-term investors looking for ways to generate practical passive income.
Oracle Corporation stock symbol ORCL is one of the giants in the technology sector. Since starting out as a leading database provider, the company reinvented itself into a leading supplier of enterprise software and cloud-based computing services, behind only Microsoft and Amazon's AWS service in both areas. Enterprise software and cloud services, like many segments of the tech sector, are intensely competitive, which means that to stay ahead, leaders have to keep finding ways to innovate. For Oracle, innovation has meant heavy investment in artificial intelligence to support their cloud services. More recently, Oracle has been investing in generative AI to add the ability to explain the predictive numbering capability that has long been embedded in its enterprise solutions for finance, supply chains, human resources, sales, marketing, and service. The goal is to give Oracle the ability to monetize the software layer of AI. While AI isn't yet a driver of growth, it is expected to become more meaningful to the company's bottom line next year. Oracle began paying a modest dividend in 2009, starting at 20 cents per year. The company has followed a consistent pattern since then of raising its dividend every 2 years, bringing its dividend payout to its current level of $1.60 per share per year. While still modest relative to the stock's current price, the fact the company has been able to raise its dividend so consistently since 2009 is a strong indication of fundamental strength. Let's dive into the rest of Oracle's details to see if those fundamentals still hold up. Just as important from a value-focused perspective is the question of whether the stock offers a useful bargain at its current price. Over the last 12 months, earnings increased by nearly 17%, while sales were 7% higher. In the last quarter, earnings rose by 6.67%, with sales increasing by 2.62%. Oracle's operating profile shows robust profit margins that are encountering challenges in the current economic environment. Net income was a little over 20% over the last year and slipped to just above 18% in the last quarter. Oracle's free cash flow is healthy and strengthening at a little over $12.25 billion in the last quarter. That marks an increase from $8.4 billion a year ago and $10.1 billion in the last quarter. Strengthening free cash flow is a useful counter to the declining net income I just described. Oracle has both healthy liquidity and more than adequate financial ability to service their debt through cash flow. In the last quarter, total cash and liquid assets were more than $9.9 billion, while long-term debt is high but serviceable at about $82.5 billion. Oracle's annual dividend is $1.60 per share. At the stock's current price, that translates to a modest dividend yield of 1.41%. With about 2.75 billion shares outstanding, the next increase in Oracle's dividend payout, which should be 32 cents per share per year, will take approximately $880 million from the company's coffers. That sounds steep, but given the high level of cash on hand, as well as free cash flow, management could raise its dividend around the next earnings report without hardship. Even with that reality, the company has a well-documented history of raising its dividend in the first quarter of every other year. The last increase came at the start of 2023. There are a lot of ways to measure how much a stock should be worth, but I like to work with a combination of price to book and price to cash flow analysis. Together, these measurements provide a long-term target at about $97.50 per share. That suggests that the stock is a bit overvalued, with about 14% downside from its current price, and a compelling bargain price at around $78. Oracle has been following a clear upward trend for the past year, with the stock's latest all-time high coming in March at around $132 per share. The stock has dropped back from that point to its current price at around $114. It's also sitting right on top of its 200-day moving average, which I mark with the blue line on my chart. That's current support for the stock right now, with immediate resistance expected at 119, where the green 20-day moving average line waits. A push above 119 should find next resistance at around 125, while a drop below 114 should find next support at around 110 per share. It's hard to argue Oracle's fundamental strengths, but given the current strongly bearish momentum the stock is showing, along with its currently overvalued state, and the likelihood that the next dividend increase won't come until the end of the first quarter of 2025, there's really no way to call Oracle a useful value right now. Better to check back in a quarter or two to see if the stock's fundamental metrics have gotten strong enough to change the value discussion.
Thanks for your time, everybody. If you like this video, go ahead and give it a like. Help me grow my channel by hitting the subscribe button, along with the bell so you'll get notified every time I upload new content. If you really want to leverage the power of my Rebel income system with information you can use every day, sign up for a free 7-day trial on my Patreon page. That link is in the description area for this video. Thanks again for your time. I'm Thomas. Talk to you again soon. Happy investing, everybody.